Hello and good morning. You're tuned into Market Cafe. I'm Ankita Saxena, and in the next half an hour, I'll take you through all of the transpired on the global front, the markets, and of course, the cue you need to watch out for before the start of D Street today. Let's take a look at the Wall Street and how that shaped up yesterday. Well, we did see the Wall Street snapping its three-session losing streak yesterday, with all the major industrial, averages trading in the green. In fact, we did see that sectoral churn getting back into the AI and semiconductor stocks, because we did see VanEck Semiconductor ETF that climbed 4% as investors rotated back into artificial intelligence related names, and on account of that we did see Nasdaq that was trading up with gains of more than 320 odd points, 1.3% uptick coming in on Nasdaq. The S&P 500 also eked out gains of almost 0.9%, and Dow Jones also was trading up 385 odd points, 0.7% gain coming in there. Remember, we have the earnings season that's going on in the US as well, and we did see some better than expected earnings from the blue chip companies, including 3M, General Motors, that help ease the concerns about the health of corporate America. And the chip makers, like I mentioned, also rallied on account of the funds flowing yet again back to these names, and on account of that we did see Nasdaq also doing well in yesterday's trading session. Also, taking center stage are the earnings for Tesla. We have Alphabet that will be reporting their quarterly earnings today. We'll be getting the report tomorrow, and that is what we are waiting and watching out for, because investors are watching closely the updates on AI spending, whether it's the cloud demand, the corporate technology budgets, and the outlook for the second half of the year. And that will really help decide the future and fate of all these AI and semiconductor related stocks that saw a rebound in yesterday's trading session. So that's how really the Wall Street shaped up yesterday. It was cushioned by the earnings season, but the oil still remains elevated, though it is now, it is below the $95 per barrel mark. It still remains elevated on account of the blockade that the Houthis have imposed, and that has really threatened the energy supply. And on account of that, we do see the oil prices that remain elevated. Brent trading with uptick of 1.5% at $92.42 a barrel, and WTI is also trading at $84.91 a barrel. So the LNG supply concerns have intensified on account of that Houthi blockade, and of course the escalating tensions that still persist between US and Iran. But let's talk about the Asian handover and how that looks like. Well, Asian markets are trading mixed right now, with the Chinese markets taking a knock. Hang Seng is down almost 0.7%. Shanghai is absolutely flat, though in the red. S&P ASX 200 is trading very flat in the green, though 16 odd points uptick coming in. Nikkei is the only one that is seeing some gains of 1.8 odd percent. So that's the only market that is doing well, because look at the implied start to Nifty as well on the back of elevated crude prices. We do see cuts coming across the Indian markets as well. 70 points downtick is what we're expecting at the start of today morning's trading session. But let's talk about and shift focus to India and the geopolitical drama that's unfolding. The CJP the protest entered a critical phase, with political tensions escalating after Congress leaders staged a sit-in outside PM's residence. The demonstrations ended the detention of Rahul Gandhi, Priyanka Gandhi Vadra, and several opposition leaders who were later released. Meanwhile, activist Sonam Wangchuk was shifted to Safdarjung Hospital to Medanta Hospital in Gurugram after the Delhi High Court cleared his transfer. Ministers JP Nadda and Jitendra Singh later visited him at the hospital to inquire about his health. My colleague Sabyasachi is now joining us with the latest updates.
Well, that's right. Yesterday, the Congress party, the leader of opposition, protested outside the residence of Prime Minister Narendra Modi. Now, there are several demands which the Congress party has put across. The number one is the resignation of Union Minister Mr. Dharmendra Pradhan, and they also want that there should be a discussion about the alleged brutality against the students and the youth in the national capital, in the parliament, and there should be immediate norms as far as the education sector is concerned. Now, these are the demands of the leader of opposition, Mr. Rahul Gandhi. They also demanded that the FIR that has been registered against the youth should be immediately taken back. Now, yesterday after the tussle, we saw the central government, they had sent Dr. Jitendra Singh at the location to meet Mr. Rahul Gandhi, and the centre has said that they are ready to hold discussion as far as the neat paper leak issue is concerned. Meanwhile, the politics over it is continuously increasing. We had seen yesterday the Samajwadi Party, the NCP Sharad Pawar faction, as well as the other political parties like the Trinamool Congress extended their support to Leader of Opposition, Mr. Rahul Gandhi. And they say that the Parliament has to function because when the Parliament resumes today on Wednesday, there's going to be huge chaos both from the opposition as well as the centre side, because the opposition has made its point very clear that they want discussion on the current situation, because these are issues which are concerning for the general public, and that is what Parliament for, to address the issues of the general public, and that is the reason why the opposition wants that discussion should take place in the Parliament. And they have also met Lok Sabha Speaker Om Birla to discuss this issue, but that meeting did not yield any sort of concrete result. And Sonam Wanchuk has been continuing with this hunger strike. Yesterday, the centre had sent Dr. Jitendra Singh as well as JP Nadda to meet him, and this outreach had come in after the NDA meeting yesterday, where Prime Minister Narendra Modi himself said that the message should go out to the country that the BJP as well as the NDA partners stand with the youth, stand with the students, and they are also concerned about this issue, and that is the reason why this outreach could be seen from the central government side.
All right, Sabyasachi, thank you so much for joining us with the latest updates from Delhi. We'll let you go on that note, but let's move and shift focus to the West Asian tensions that remain elevated as the US carried out its 10th straight night of strikes on Iran, while Tehran reportedly attacked a tanker in the Strait of Hormuz. Yemen's Houthis have now declared a maritime embargo on Saudi Arabia, raising fresh concerns over regional oil supplies, even as the mediators push for a 10-day ceasefire between Washington and Tehran. And the Pentagon says the U.S. war in Iran has cost $37.5 billion so far, as Defense Secretary Pete Hegseth sought urgent funding from the lawmakers. The request comes amid growing political opposition ahead of the U.S. midterm elections, with the administration also seeking a $1.5 trillion defense budget for 2027. And Trump says that Iran is desperate to hold talks, but the U.S. has no interest in negotiations until they are meaningful. Trump also said that Washington will discuss alleged Chinese interference with Beijing, adding that both the countries engage in actions against each other and that the relationship is not a one-way street. Let's listen in.
They want to meet desperately to try and end it because they're getting decimated. You don't get that when you listen to your fake station, but you don't know anything.
So talks are
you know
still
something that I
possible,
don't know.
likely?
You know something I don't know.
Well, tell us.
I will tell you, they want to desperately meet, and until they're ready to meet in a meaningful way, we have no interest in even. I think China's maybe a little bit different today than it was then, but look, they do things and we do things to them. I'll be honest, we do things to them too. It's not a one-way street, but we'll be talking to them.
And while Trump has unveiled a phased tariff plan for imported generic medicines aimed at reshoring pharmaceutical manufacturing for America, from August 1, generic drugs entered the U.S. will continue to face zero tariffs for 2 years. However, from August 2028, imports will attract a 100% tariff for 1 year, rising to 200% thereafter. Trump said that the move is intended to encourage companies to build manufacturing facilities in the U.S., while the policy for patented and branded medicines remain unchanged. With over 90% of medicines sold in the U.S. being generics, the announcement could have major implications for global exporters, particularly Indian pharmaceutical companies with significant exposure to the U.S. market. And Meryl is joining us now with more insights and explanations on the implications for the Indian players. Over to you, Meryl.
That's right. It's quite a major update coming in for the entire pharma pack when we've seen a major announcement from US President Donald Trump on tariffs on generic medicines. Trump has proposed zero tariffs on generics up until the year 2028. But after that, the tariffs jumped sharply up to 100% from 2028 onwards and 200% from 2029 onwards. Now, at a first glance, those numbers may look alarming, but it actually takes away the biggest overhang which has been hampering Indian pharma sector since last year, that's 2025. The uncertainty around US tariffs was keeping Indian pharma particularly volatile in the past year, where a review on generic tariffs was expected in this year, calendar year 2026. And what this announcement does is that it effectively gives Indian pharma players a 2-year breather, meaning that exports and pricings largely remain unchanged and stable up until 2028. Now, the message from Washington is also clear. They've asked pharma players worldwide to use this window to manufacture in America. So this zero tariff period of 2 years is effectively a deadline for companies to strengthen or build their US facilities and strengthen their manufacturing footprint in the US before the higher tariffs start kicking in. So now we're going to be especially keeping an eye on companies with a high dependence on US, with a high contribution coming in from the US for the revenue. And these are the likes of Aurobindo, Dr. Reddy's, Lupin, Zydus, Cipla, and many of the major pharma names which are likely to be in focus in trade today as well. And we're going to be keeping a watch on even the smaller players' visibility to plan their future investments. So now the key focus remains on beyond 2028, where the economics for these Indian players to export to the US could actually shift a little bit. So remember that US is major market for India as a whole. India currently supplies roughly 40 to 50% of all the generics prescriptions in the US. So any change in the US trade policy is immediately going to have a major impact on Indian pharma. But for now, these are the names that we're going to be keeping a close look on. These are, again, as I reiterate, Aurobindo Pharma, Dr. Reddy's, Lupin, Zydus, Cipla, and the major Indian pharma players with a major exposure to US in their business.
All right, Meryl, thanks so much for joining us with a roundup of the impact that the US tariffs will have on Indian pharma business. But let's move on and talk about the Canadian Prime Minister Marc Andre says that he has agreed with Trump to intensify trade negotiations, but warned that Ottawa is prepared to consider all the options if the tariffs take effect. Meanwhile, most Canadian provinces have vowed to keep the restrictions on the US alcohol in place, with Ontario calling for a dollar-for-dollar response and British Columbia ruling out restocking the American liquor until a broader trade deal is reached. And new UK Prime Minister Andy Burnham has announced his first major policy, scrapping the VAT on the household electricity bills from October 1st to help ease the cost of living crisis. The move is expected to save the average household around £45 a year and will be funded by cancelling a £1.8 billion digital ID program. And Nike is overhauling its China strategy by cutting off thousands of online distributors from January next year. The sportswear giant will instead focus digital sales through its own website and app, along with official stores on the Tmall, the JD.com and Douyin. Now, Nike says that the move is aimed at delivering a more consistent shopping experience and tighter pricing control. And JP Morgan CEO Jamie Dimon says investors are underestimating the geopolitical and fiscal risks, warning markets may be too complacent. Dimon said that he would not buy either equities for long-dated US treasuries at current valuation, citing conflicts in Ukraine and West Asia, US-China tensions and widening government deficits. While acknowledging the global economy has become more resilient, he warned that the persistent fiscal pressures could eventually push the interest rates higher. And well, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more updates on the markets. Stay tuned. Welcome back. You're tuned into Market Cafe, and I'm Ankita Saxena. I'm taking you through all the cues you need to watch out for before the start of D Street. And let's talk about all the stocks that will be in focus in today's trading session. And for that, my colleague Rabinder is now joining us with all the stocks and news. Over to you, Rabinder.
Well, as on the back of Q1 FY27 earning Aavas Financial Risk can be in focus, company reported very good set of number in Q1 FY27. Company's NI grew by more than 16.5% on a yearly basis at rupees 324 crore, and profit has also saw an uptick of 23%. And the performance was broad-based, which was driven by a strong pickup in volumes, meaningful improvement in resource productivity, and a healthy 38% yearly growth in home loan segment. Anthem Bioscience too can be in focus after reporting weak number where company revenue degrew grew by more than 22.5% on a yearly basis, and company EBITDA margin saw a minor uptick of 50 basis points on a yearly basis, and revenue declined mainly because of the company's CRDMO and specialty. Both the segment reported a degrowth on a yearly basis. Shine DLM can be in focus after reporting its strong Q1 FY27 earnings. Revenue saw an uptick of 34% on a yearly basis, and EBITDA margin has expanded from 9.2% to 10.5%. And company's order book was at 2,599 crore, which was highest ever since its IPO. And Q1 FY27 order intake was at 552 crore. And PAT growth, company's PAT more than doubled due to strong revenue and a healthy mix. And apart from this, from the pharma space, Aurobindo Pharma can be in focus, where Curatech Biologics Private Limited, which is only a subsidiary of Aurobindo Pharma, has received approval from the National Health Surveillance Agency of Brazil for its biosimilars manufacturing facility in Hyderabad. AB Capital can be in focus, where the company has made an investment of rupees 123 crore on a right basis in equity shares of Aditya Birla Health Insurance Company. And lastly, keep an eye on JSW Energy, where JSW Energy had completed acquisition of additional equity stake in Toshiba JSW Power System Private Limited. So back of this, JSW Energy too can be in focus.
All right, so those stocks will be in focus, but let's get you another list of stocks that will be in focus in today's trading session. And for that, my colleague Ashesha is now joining us. Take it away, Ashesha.
Yes, let's talk about a couple of earnings that will be in focus, and let's start with Trident, which has reported stronger than expected set of numbers. We have revenues which have risen by about 4.7% on a year-on-year basis. Profitability too has seen an uptick of nearly 13%, while margins have come in at 16.8%, largely steady. So we haven't seen many changes when it comes to margins, but otherwise steady set of numbers that the company has reported. Gabriel India, meanwhile, has also reported good set of numbers. Revenue up a solid 16% YOY. Margins have come in at 8.7% versus 9.6% that the company reported same time last year. And we have EBITDA that has also come in ahead of what the street was working with. So largely in line to better than expected set of numbers is what Gabriel India has reported. Let's also talk about Canara Robeco AMC, where revenues have risen by a solid 20% YOY, and profitability has also seen an uptick of nearly 24%. So in line to better than expected set of numbers for Canara Robeco AMC as well. Meanwhile, let's also talk about the hospitality sector, and Royal Orchid will be in focus because the company has expanded its collection with Lakshmi Narayan Palace Resort in Vadodara. So clearly some expansion plans coming their way. Lastly, CMAC will also be in focus, and there's a positive news piece over here where the company said that HAL Offshore Limited has entered into a memorandum of understanding with CMAC, and this is for CMAC Anand, which will be purchased by CMAC from HAL for a consideration of about $70 million US. So another fleet that is being added, so positive development that has come in for CMAC over here.
All right, Ashesha, thank you so much for joining us with all the earnings candidate that will be in focus in today's trading session. But also let's talk about Anantraj that has received approval to demerge its businesses, creating two separately listed companies. The move will separate its real estate and infrastructure operations from the fast-growing data center and cloud businesses. My colleague Ravinder is now getting us the key details of the demerger. Over to you.
Well, yes, Anantraj has announced a major strategic restructuring, with the board approving a demerger that will create two independent listed company. And under the proposed demerger, the existing business will split into Anantraj Limited, which will be the house of real estate and infrastructure business, and Ashok Cloud Private Limited, which will which will be the data center and cloud business company. And according to the management, both business had evolved with the different growth strategies, capital requirements, and operating models, and separating them into independent entities is expected to improve execution, sharpen management focus, and enable more capital allocation. And the company believes that the demerger will also help unlock long-term shareholder value by allowing both each business to pursue its own growth strategy. And for the shareholders, the approved share entitlement is one Ashok Cloud share with a face value of 2 for every one Anantraj share with a face value of 2 held by the eligible shareholders. And the independent listing is expected to unlock the hidden value of the data center business, providing a pure play valuation for the cloud business and allow investor to value both business independently. So back of this positive development, Anantraj can be in focus.
All right, moving on then. Nestle is expected to deliver yet another strong quarter with PAT rising 27% on a year-on-year basis. The company is expected to deliver a strong double-digit volume growth across all the segments except milk and nutrition. Snehi is joining us with what to expect.
Well, yes, for Nestle's numbers, we're expecting to see yet another very strong quarter for the FMCG major. Remember, last quarter was also very robust in terms of the volume growth that we've seen for the company. So here's what we're penciling in. On a standalone year-on-year basis, the revenue is expected to come in slightly north of 6,000 crore rupees, an uptick of 19% on a year-on-year basis. For EBITDA, we're expecting that number to hike up by 23% at around 1,350 crore rupees. Net profit is seen around 837 crore rupees, which is a very healthy jump of 27% on a year-on-year basis. And for margins too, we're expecting to see a very healthy expansion on this front at 22.3% is what we're penciling in. Remember, this time last year that number was 21.6%. In terms of some other key expectations, volume growth is seen between 13 and 15%, which is very strong. Value growth is seen at 19%, and continued volume-led double-digit momentum is seen across the board, across the company's segments, barring milk products and nutrition. And these segments have actually continued to be slightly weaker compared to the other segments for the company, and we're expecting that trend to play out this time around as well. On the exports front, we're expecting this number to go up by 20 to 25% on a year-on-year basis, and margins are expected to grow healthily due to the higher saliency of the company's raw material basket towards agri-commodities, which has seen lower inflation. So in terms of the key monitorables to watch out for when the numbers do come out, watch out for the management's commentary on outlook on raw material prices and the consequent pricing action, volume growth and demand trends, the distribution expansion update, if they've added any new production lines. Remember, they very recently added a new Kit Kat and Maggi production line at Sanand, so we're going to be watching out for how those are doing as well, and any outlook on rural versus urban demand and any brown or greenfield expansion on the cards. We'll be watching out for all of these factors at play, but yes, all in all, we're expecting to see yet another very strong quarter from Nestle.
All right, with that, it's time to wrap up this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.